Welcome back to Top Down, Bottom Up. When we're looking at the top down today for the month of March, I'm showing you a picture behind me of the S&P 500. Now we're looking at this chart as of March 2nd. So that's one day after the news with the strikes in Iran have taken place. And it's pretty normal that there's a lot of fear in the market from investors right now. But when we look at this chart behind me, it's important to note that at Econ Wealth, we don't invest based off headlines. We invest based off of objective measures and what we do with our very rigorous process. So when we look at this chart, it's a 5-year span. There's a lot of headlines, probably dozens that have happened over that period of time. But if you look at the general trend, it's up and to the right because the market kind of takes that stuff in stride, even if there's the near-term volatility. But what I'll show you is you can see that the pattern is starting to slow down and almost start to curl at the top and lose momentum. That's why we have started to shift to a little bit more of a defensive stance here, and we're looking at other areas of the markets like bonds. Take a look at this chart behind me. This is long-term corporate bonds. It looks a lot different. We recently broke out above a key area of resistance and are starting to move higher. Last week, we shifted a lot of things in the portfolio. Not gonna spoil anything because Brian's gonna talk about that from the bottom up side, but we're shifting to a very defensive approach here. This is a midterm election year. A lot can happen. Technically, there's some more volatility, but we think that we're gonna come out on the other side heading into 2027 on a positive note, but we're definitely gonna look to control the risk in the short term. Now I'll send it to Brian to explain what we've been doing from the bottom up.
All right, so let's take a look at things from the bottom up. Now this is gonna be a little bit of a more in-depth look at the email that I had sent out not too long ago. We'll take a little bit of a closer look at some of the activity that we've been doing, like Jake had mentioned, becoming more defensive. So we've sold from some equity positions like Generac, Amgen, UPS, and also Mattel, which we did for tax purposes, and now we're shifting into bonds. And the idea here is that we want to try to smooth out any volatility that's ahead. So we're looking at, like Jake mentioned, long-term corporate bonds. We've also bought more in the mortgage-backed securities, and we're looking for things that provide yield and can provide income for you. Now, in the equity sector, one of the areas that we still like is energy. Very relevant. And so the stock of the month this month is Diamondback Energy. It's got a pretty cool ticker symbol. It's FANG. You can make the connection there, but you can read more about it in this month's edition of Stock Stories. As always, it's Jake and Brian. This has been Top Down, Bottom Up. Stay in touch with Econ Wealth.